করো না করো। এই আমার এই মামুন অফ করে দিছিল। এখন শোনা যায়?
Yes, sir. শোনা যাচ্ছে, স্যার।
ঠিক আছে, জুয়েল রানা, গুড। তাহলে এখন যেটা হলো যে ইউ ক্যান অলসো সিট ফর দ্য এনি এক্সাম মাই ডিয়ার উইথ হ্যাভ দ্য সিএ ডিগ্রি। সিএ থাকলে এটা হোক না, এটা হলো তবে একটা জিনিস হাইলি রিমুনারেটেড। আমি আমার কথা বলে শেষ করে দিই। আমি এই জায়গার এডিশনাল ডাইরেক্টর, সিএ না হয়ে সিএ প্রোডাকশন করতে। তো যেটা বলতে চাচ্ছি যে বোর্ড আপনাদের এডুকেশনের বোর্ড অফ স্টাডিজের আমি সেক্রেটারি, মেম্বার সেক্রেটারি। এবিএম আজিমউদ্দিন আইকন, ৩৯ বছর উনি ছিলেন স্যার। স্যারের পরে এখন আরেক আইকন আকলাবেনের।
স্যার এটা দেয়া হয় কি জন্য? গ্র্যাচুইটি ফান্ড কি জন্য দেয়া হয়?
Gratuity fund, it is necessary for the employees because since the employee is working with an organization for a number of years, so after a certain period, the SSC is given this kind of benefit. So, for example, if you work for 5 years in an organization, you will be given a gratuity when you leave the organization. So this is as a recognition of the service you have provided to the company. So for example, if you complete the service for 5 years, and after that, you will be given, say for example, equivalent to 1 month's salary for 5 years. So that should be one-time payment, and it should be your benefit. Hello. Hello. That is also given in the government sector as well as in the private sector, so or even in the autonomous body. So for example, when your service is for 5 years, this is the policy of the company, and after that you will be given for each years of service, 1 month's basic would be paid to you. Say for example, you have completed 8 years of service. So if you have completed 8 years of service, you may be given 8 times the basic salary as gratuity. So that is a one-time payment made to you for your benefit and as a recognition to the service you have already provided to the company. So in the government as well, there is a system of calculation of gratuity, and it is on the basis of the last basic payment. So if the last basic payment is taka, say for example, 10,000, so there is a system of calculation, how you will calculate it. You have to calculate 90% of taka 10,000, which is 9,000, and this 9,000 should be divided into 2 parts. That is 4,500, and 4,500 should be multiplied by 230. So whenever you get this amount, that is 4,500 times 2,030, that figure would be treated as your gratuity. So this is the calculation in the government sector, but it might be different in the private sector or autonomous body. But whatever policy you adopt, that should be approved by the National Board of Revenue. If it is approved by the National Board of Revenue, in that case, the person who is getting the benefit of gratuity, it will be exempted from tax. He does not have to pay any tax. But if it is not approved, then that fellow has to pay taxes on that amount. So that's the difference. And it has been said.
First কথা তো বুঝে নিয়েছে। ফেলো ট্যাক্সেস হবে, এটা বুঝে নিয়েছে।
If the gratuity fund is not approved by the government, that means the National Board of Revenue. In that case, if a person who receives benefit as gratuity from the company, that gratuity would be assessed to tax. That means the person would have to pay taxes on that.
So thank you, sir.
Yeah. approved superannuation fund or pension fund. It is also like the gratuity fund. That means the pension fund or the superannuation fund has to be approved by the National Board of Revenue in accordance with the provisions of Part A of the first schedule. So you will see one schedule, which is first schedule, and Part A of the first schedule actually outlines how to prepare the fund and what are the procedures you have to follow for maintaining that fund. And if you give a policy to the National Board of Revenue on behalf of the company, in that case, it could be approved by the National Board of Revenue. But if the National Board of Revenue does not approve of it, in that case, your superannuation fund or pension fund will not be an approved one. And if it is not approved one, and when an employee goes out of the company after retirement, in that case, whatever pension money he gets from the company will not be exempted from tax. But if it is approved, whatever money he will get as pension money, it will be exempted from tax. He does not have to pay any tax on that. So that's the thing.
তাহলে
So-
স্যার গ্র্যাচুইটি এবং পেনশন অথবা সুপারঅ্যানুয়েশন ফান্ড সেম যদি
Same.
অ্যাপ্রুভ হয় তাহলে ট্যাক্স দিতে হবে
Yes, if it is approved, then it is exempted from tax. The money you receive from that fund will be exempted from tax. But if it is not approved by the National Board of Revenue, then you have to pay taxes when you get some money from the fund. So that's the understanding. And whenever somebody approaches you with regard to forming a superannuation fund or pension fund or gratuity fund, you have to advise the company accordingly. And you have to tell the company that you have to get it approved by the National Board of Revenue. If you do not get it approved by the National Board of Revenue, in that circumstances, any person of your company who is receiving some benefit from this fund will not be exempted from taxes. So that's the understanding. Is it okay?
Sir,
ওকে
Yes.
sir, in gratuity fund, we have learned that 2.5 crore is exempted. In which one approved or unapproved? 2.5 crore exempted.
2 crores 50 lakhs. 2 crores 50 lakhs. That is the figure which is exempted from tax if it is approved. But if it is not approved, then whatever amount it is, that should be assessed to tax.
স্যার গ্র্যাচুইটির মধ্যে কি লিমিট আছে 2.5 crore
What I am saying now is that 2.5 crore, that means 2 crores 50 lakhs. That is the maximum limit that you can get as an exemption amount. So if you receive up to taka 2 crores 50 lakhs, that should be exempted. If you receive more than that, then it will be taxed. The remaining amount would be taxed after 2 crores 50 lakhs.
Sir, in approved gratuity or superannuation fund, in the time of forming, will it be taxable? In year to year, the formation time of that fund?
Formation,
Sir, formation time of that fund or year to year, the amount have to be paid or have to be deposited for the fund. At that time, will it be taxable under this head, under this account?
gratuity fund or pension fund. So this is actually maintained by the employer, not by the employee. So whenever the fund is maintained by the employer, definitely employer will contribute a certain amount of money to that fund. But if it is not approved by the National Board of Revenue, then whatever contribution would be made by the employer will not be an allowable expenditure. That will not be an allowable expenditure. But if it is approved by the National Board of Revenue, in that case, it will be treated as an allowable expenditure. but the benefit will be received by the employee at the time of his leaving the company or the government. And pension money will, of course, be received by the employee after retirement. So the benefit will be the employee's benefit, and his benefit will be taxed if the fund is unapproved, and if it is approved, then his income, whatever he receives from the fund, will be tax-free or exempted from tax. So that's very simple.
So like provident fund, when employer contribute to provident fund, that is taxed. If it is recognized, then this is taxed yearly basis. And like that, will the gratuity and superannuation fund be considered like provident fund, or in other way, or is it tax free at all if recognized?
It is like the pension fund, and the pension fund is could be pension fund means provident fund, if there is any. Provident fund could be contributory provident fund or non-contributory provident fund. So you know that contributory provident fund is the employee will be contributing to that fund, and employee will also be contributing to that fund. So there will be two contributions each month, and an amount will be accumulated. And non-contributory provident fund, that means only employees' contribution will be there, and government or the employer will not contribute. So if you think of the government case, the government does not contribute to the employees' country or to the employees' provident fund. Only the contribution comes from the employees. However, an interest is actually accrued on the contributions made by the employees. And at the end of the service, the person concerned or the employee will receive the amount of contribution he has made to the fund, as well as the interest accrued thereon. So this figure will be consisting of the contribution plus the interest accrued thereon. And in some companies, of course, you will see contributory provident fund. That means employer will equally contribute to the fund, and interest would be accrued thereon. So like that. And the most important thing that you have to remember, that whatever fund you form, you have to form according to the schedule. So the names of the schedules are given here, and whenever you form the fund, the policy has to be mentioned, and the policy has to be submitted to the National Board of Revenue for approval. And if the National Board of Revenue approves of the policy, in that case, the contribution would be allowable, and the benefit you will be receiving at the end of your service would also be exempted from tax. So that should be the understanding. And if you go to part C of the first schedule, you will see the procedure, how to form this fund and how to approach the National Board of Revenue for approval. And of course, every year you have to get it renewed. The National Board of Revenue will continue to approve it every year. So that is the understanding. Is it okay for you?
Yes, sir.
Okay. Let me have 5 minutes time, please. Okay, let us start again. And the next terminology should be SSC. SSC, we know that it means taxpayer. So SSC is not very common among the general people, but the taxpayer is very common among the general people. SSC is widely heard in the taxation department among the lawyers, advocates, income tax practitioners, deputy commissioners of taxes, etc., etc. So it's very common in the taxation department who are involved with the assessment of works, but it is not common among the general masses. So who is in SSC? That should be known to you. So generally what we understand is that whenever a person is liable to pay tax to the income tax authority, in that case, he is an SSC. So what we understand, a person is supposed to pay tax when he has got taxable income. So taxable income means when the income exceeds the general exemption limit, he is supposed to pay taxes. So in the current fiscal year, the general exemption limit is stuck at 3 lakh for an individual. So it is a little bit different in case of women and different in case of retarded person or in case of a freedom fighter, etc., etc. But generally we understand. Generally we understand that. Hello. 2 plus 8. Generally, we understand that a person is supposed to pay taxes if his income is above the general exemption limit. That means if it exceeds 3 lakh taka, in that case, he has to pay taxes. Okay. Every person who is required to file a return under Section 75, Section 89, and Section 91. So there are some sections which have been mentioned here, and under which a person is supposed to file a return. And if a person is supposed to file a return, then he would be treated as an SSC. So under Section 75, you know that 75 is that whenever you have got taxable income, you are supposed to submit the return by the 30th day of November each year, which is called the tax day. And you are also supposed to submit a return whenever a notice has been issued by the DCT to show your income under Section 93. That is, the notice is issued under Section 93 when the DCT has got a reason to believe that you have got some income, but you did not show the income in the return. So it means that the SSC is supposed to submit the return showing his income. He escaped the assessment for some reasons or other. And in that case, whenever this notice is issued to the SSC, he will be treated as an SSC in the eye of law of the income tax department. Whenever a person has been issued a notice by the DCT, he will be an SSC. And if a person is entitled to having a refund money from the taxes department, he will also be treated as an SSC. So he was assessed before and he paid taxes beyond the required amount of tax. In that case, he is entitled to a refund. So if a person is entitled to a refund, but he is not being assessed by the Deputy Commissioner of Taxes now, in that circumstances, he will also be treated as an SSC. And a person who desires to be assessed and submits the return of income under this ordinance, he will also be treated as an SSC. So when a person desires to be assessed, that is also a question you must know. When a person desires to be assessed, I desire to be assessed when I need a certificate from the taxes department. Say, for example, I would like to apply for a piece of land or for a plot of land under the Rajuk, Rajdhani Unnayan Kotripokho. So the Rajdhani Unnayan Kotripokho has got a condition. The condition is that if you want to apply for an allocation or allotment of a plot under it, then you have to submit an income tax certificate, TIN certificate, as well as a clearance certificate. So clearance certificate means you have paid taxes to the government, and that should be the certificate issued by the Deputy Commissioner of Taxes. So when you have taxable income, then the tax clearance and you pay the taxes, in that case, a clearance certificate will be issued by the Deputy Commissioner of Taxes. Otherwise, he cannot issue a tax clearance certificate. So if you do not have any income, really, that means you do not have any source of income. Rather, you are an unemployed person. So in that case, where does the income come from? You have to show a return in which income will be shown, maybe from any source, whatever you want to. Why? Because you need to have a certificate from the Deputy Commissioner of Taxes. So this is the desire of the SSC, that he wants to become an SSC because of some reasons. So in that circumstance, he could be treated as an SSC. There could be some other examples. Examples like whenever you want to do a business, that means you want to do contractor's job. Contractor's job means you want to supply materials to an office or office stationaries to a government office. And in that case, you have to produce a clearance certificate, income tax clearance certificate. That means you are paying taxes to the government and you do not have any outstanding liability in terms of tax to the government. So even if you do not have any income before, but still you had to submit a return and you had to get it cleared. That means you had to take or obtain a certificate from the Deputy Commissioner of Taxes stating that you had no liability to the taxes department. And also, every person against whom any proceeding has been drawn by the income tax authority, he will also be treated as an SSC. Again, whenever you were assessed before, but you discontinued your business, that means you stopped your business. Still then, after 3 years, up to 3 years after the closure of the business, you have to submit the return stating nil income. That means you are showing that you don't have any income, but still you have to submit the return. So these are the conditions under which a person could be treated as an SSC. So you can remember with all these provisions here. And you will also see when a person is supposed to submit a return. And whenever a person is supposed to submit a return, he will be treated as an SSC. So if you have a car in your own name, you have to submit a return. And in that case, you are an SSC. If you have a flat or an apartment or a house in the city corporation area, in any city corporation area, of course, in that case, you have to submit a return. And then you will also be treated as an SSC. So these are the conditions when you have to submit a return. And you will be treated as an SSC. If you have a TIN certificate for any reason, then you are an SSC. That means you are purchasing savings instruments. That means family Sanchaya Patra or 3 monthly profit making instruments like that, or you are buying pension certificate, pensions instruments, pension saving certificate, which is called. And in that case also you are an SSC, because you have to have a TIN number. If you do not have TIN, in that case you will not be issued the savings instruments, whatever you want to buy. All these have to be known to you. And assessment year. The next definition is assessment year. Assessment year means the period of 12 months commencing on the first day of July every year, and includes any such period which is deemed under the provisions of this ordinance to be assessment year in respect of any income for any period. So as you know that income year is the fiscal year or the financial year starting from the month of July up to the day of 30th June. So that is the income year in which you are earning your income. And when the income year ends, that means ends on the 30th day of June, from the first day of July, the assessment year starts. An assessment year continues up to the 30th day of June of the next year. So this 30th June, that means this year, 30th June, is the end of the assessment year, which actually started in the last July. So this means the assessment year, and for this, the income year was 1st of July 2020 and up to the 30th day of June 2021. So that is the income year. And from the 1st day of July 2021, the assessment year starts. And that assessment year comes to an end on the 30th day of June this year. So that is the way of understanding it. And the assessment year could be a little bit different in some cases. Say, for example, my assessment year actually coming to an end on the 30th day of June this year. But I continue with my business for another 1 month. Say, for example, this July, that is the last month up to which I will continue with my business. So after that, I will be closing down my business. So in that circumstance, what would happen to me? And the Deputy Commissioner of Taxes has got the option that he can assess the income of that July under the same assessment year, that the assessment year 21-22. He can assess the income for the income year, whole of the income year, as well as the income for the single month, after which I will be closing down my business. So an additional 1 month's income under certain circumstances could also be taken into account. So what is that? The income year which has ended on the 30th day of June 2021, but the SSC continued the business up to July 2021. So his assessment could be completed for 13 months under the same assessment year. So these are actually made under certain circumstances. But generally, what we have said, the assessment year is the period of 12 months following the end of the income year. And then come to the definition or terminology of assistant commissioner of taxes. So assistant commissioner of taxes is a person appointed to be an assistant commissioner of taxes under section 3 of the Income Tax Ordinance 1984. So assistant commissioner of taxes is the entry point into the income tax department. That means if you want to enter into the income tax department as a class 1 officer, you must enter it in the position of an assistant commissioner of taxes. So an assistant commissioner of taxes could be recruited directly by the Public Service Commission of Bangladesh. And in that case, the recruitment is made through the BCS examination. So whenever you pass the examination and if an option is given by you to become an assistant commissioner of taxes, and if you are within the proper assessment of the PSC, they can recruit you as the assistant commissioner of taxes. Here we can give you an example. The example is that you have opted for an assistant commissioner of taxes, and you are among the top 10 of the BCS examination, and there are 10 positions for assistant commissioner of taxes. So 10 people would be recruited as assistant commissioners of taxes, and your position in the examination is among the top 10. So in that circumstance, since you have opted for becoming an assistant commissioner of taxes, you will be given the chance because your result matches with your option. So that is the way how actually you are recruited. So assistant commissioner of taxes, as I have said before, that could be recruited direct by the Bangladesh Public Service Commission, but otherwise some are recruited through promotion. That means assistant commissioners of taxes are made by the department through promotion. So they are actually extra assistant commissioners of taxes, and the extra assistant commissioners of taxes are promoted to the ranks of assistant commissioners of taxes. So that is also the way how assistant commissioners of taxes are recruited or are made. So the recruited position, direct recruited position and promoted positions, there is a ratio between the two, and the ratio is 70-30. That means directly recruited assistant commissioners of taxes are 70%, and promoted assistant commissioners of taxes are 30%. So that is the way how assistant commissioners of taxes are recruited. Then come to the definition of Bangladeshi company. So first of all, you have to know about the company. What is a company? You understand what a company is because this is a form of business. So company is formed under the Companies Act 1994. But before that, the Companies Act 1913 was in existence in Bangladesh, under which all the companies were formed. So there are two types of companies. One type is private limited company and another is public limited company. Generally, private limited companies have got shareholders for maximum number of 50. That means it starts with 2, minimum 2 and maximum 50. So that is private limited company. And for public limited company, the minimum number of shareholders should be 7 and maximum is limited by the shares. So it's more or less, we can say, unlimited. And there is a difference between the two, and public limited companies can issue shares if they want to, but private limited companies cannot issue shares. And the company, whichever it is, has got memorandum of association and articles of association. In the memorandum of association, there are some clauses, important clauses, and number 1 clause is name clause, number 2 clause is object clause, number 3 clause is situation clause, number 4 clause is liability clause, and the number 5 clause is capital clause. So these are the clauses. So the situation clause is very important, because when a company is formed under the Companies Act 1994 and the registered office of the company is located in Bangladesh, then it would be treated as a Bangladeshi company. And if the registered office of the company is not located in Bangladesh, then it cannot be treated as a Bangladeshi company. So that's the difference. And then come to the definition of banking company. Banking company is also similar to a general company, and the banking company is regulated by the Banking Companies Act 1991. So all the banks are formed under the Banking Companies Act 1991, and the function of a banking company is to transact for taking deposits from the public and to lend money to the public. And it has got some responsibilities which it has to perform with regard to the deposit of money with the central bank of the country. And it can do any activity allowed by the central bank of the country, because it is regulated by the central bank. So foreign exchange regulations or foreign exchange dealing could also be made by the banks. But the major function of the bank is to take the deposits from the public and to lend money to the public. So that's the major function the bank performs. So there are also non-banking financial institutions. They are not banking financial institutions, but are rather non-banking financial institutions, but they also perform banking functions. Like you can say the IDLC. IDLC is a financial institution, but non-banking. But they perform some banking functions, like they also take deposits for FDR, fixed deposit receipt, and also offer interest, like that. Then come to the definition board. Whenever somebody says about board, since you are from the income tax department, that means you are a chartered accountant, you deal with income tax matters, you know what a board is. A board is always the National Board of Revenue. So when somebody says about board, it means that this is the National Board of Revenue, not other board. So this National Board of Revenue was established in 1972 under the Presidential Order number 76 of 1972. So very important positions, important institutions were formed under presidential orders that time, soon after the independence of Bangladesh, like your ICAB. Your ICAB was also formed under presidential number 2 of 1973. Bangladesh Bank was also formed. The National Board of Revenue, as I said to you, it was also formed at the same time. So these are all very important institutions or organizations for the government. Then come to the definition of business. Business, as we understand, trade, commerce, business, etc. These are more or less the same. So business includes any trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, and manufacture. So Whenever a business is there, it means it could be trade, it could be commerce, it could be manufacture. So all these economic activities are involved in business. So business, of course, what we say, this is profit oriented. There should be some sort of profit. If there is no profit, there is no business. So if it is a voluntary organization or if it is a charitable organization, this is not business. So here we should understand that business includes trade, commerce, or manufacture, or any adventure or concern, but related to trade, commerce, and manufacture. Manufacturing activity could be conducted by an organization, and manufacturing activity means you are manufacturing some products and you are selling the products to the market. It could be the domestic market, it could be the foreign market, whatever it is, but this is profit-oriented activity. And there could be trading business, of course, because somebody just imports some products and sells them in the domestic market. So that is also business. Then come to the definition of capital asset. What is capital asset? Capital asset means the assets which cannot be moved, fixed assets, we should say. And this means property of any kind held by an assessee, whether or not connected with his business or profession, but does not include. So first of all, you should understand that it could be any asset which is related to business or not. It could be related to business or it could not be related to business. That does not matter. But it does not include any stock in trade, consumable stores, or raw materials held for the purpose of business or profession. So whenever I am buying stock of any good, or I am buying raw materials in order to convert them into final product, this will not be treated as a capital asset. So that is different, not capital asset. And also the personal effects. Personal effects means movable properties. That means the properties which I can move from one place to another place. And these include, you see, motorbikes, motor cars, jeeps, jewelry, valuable articles, cash, and of course, some other assets which is being used by the SSC or by the dependents of the SSC. So whenever I have got a motorbike or motor car used by me, that is personal effect. And if it is used by my dependents, this will also be treated as personal effects of mine. So personal effects are not actually treated as capital asset. And as I said to you, stock in trade, like raw materials or opening stock, etc., these are also not treated as personal effects. But other assets which are fixed in nature, they could be treated as capital asset. And capital asset could be related to the business or not to the business. That does not matter. What is the example? The example is that if you have a piece of land which is not used for business, that is also your capital asset. But if it is used for your business, that is also capital asset. So that's why it could be said that asset which is of capital nature could be related to the business or not to the business. So that could be the consideration. And then come to the definition chartered accountant. So who is a chartered accountant? The chartered accountant is a person as defined in Chartered Accountants Order 1973, which I have said before, that the Chartered Accountants Order was under the Presidential Order number 2 of 1973. So whenever a person qualifies as a chartered accountant under the ICAB, Institute of Chartered Accountants of Bangladesh, he has to fulfill some of the conditions. That means he has to pass examinations. 17 subjects he has to pass in 3 levels. Number 1 level is certificate level, then professional level, then advanced level. So these are the 3 levels he has to pass. And if he passes the examination, then he will be a qualified chartered accountant and will be recognized by the Institute of Chartered Accountants of Bangladesh and would be given a certificate. And he can also be given a certificate which is called Certificate of Practice if he wants to practice independently. But if he wants to do a job, that is, he wants to work with a company or with a corporation or with the government, whatever it is, in that case, he will not be given certificate of practice. Rather, he would be given a certificate, meaning that he has qualified as a chartered accountant. So that is the chartered accountant. Then come to the definition of commissioner. So when the term commissioner comes in, that means comes into the scene, it means that he is the commissioner of taxes, not other commissioners. He is not commissioner of ward or commissioner of any other position, or maybe election commissioner, whatever it is. Those commissioners are not to be taken into account. So here only we will consider commissioner as the commissioner of taxes. It means that the person who is appointed to be a commissioner of taxes under Section 3 of the Income Tax Ordinance 1984. That means a commissioner of taxes is recruited, or he is made commissioner, or he is recognized as a commissioner of taxes under Section 3 of the Income Tax Ordinance 1984. So commissioner of taxes is the chief of the zone. There are 2 types of commissioners. One is commissioner of taxes. Another is commissioner of taxes appeals. So there are 2 types of commissioners. Commissioner of taxes is chief of an administrative zone, that is a particular zone in the country responsible for collecting taxes. So the function of a commissioner of taxes is to collect taxes, and a budget is given or a target is given to the commissioner of taxes. Each commissioner of taxes is given a target. So on the basis of the target, the commissioner will try to collect tax. And under him, there are other officers. And the officers are the inspecting additional commissioner of taxes, the inspecting joint commissioner of taxes, deputy commissioners of taxes, assistant commissioner of taxes, and extra assistant commissioners of taxes. So these are the positions in the zone. And he is the chief of the zone. And another type of commissioner, as I have said to you, is commissioner of taxes appeals. That means he is also chief of a zone, but that zone is called appellate zone. It is not a normal zone. So his function is to hear the appeals preferred by the taxpayers or SSCs. So when an SSC is aggrieved with the decision given by the Deputy Commissioner of Taxes, in that case, he can prefer an appeal to the appellate commissioner, that means Commissioner of Taxes appeals. So he hears the appeals and gives a decision. And he can keep the order of the Deputy Commissioner of Taxes intact, or he can revise the order of the Deputy Commissioner of Taxes. But under him, there could be appellate additional commissioner of taxes, or appellate joint commissioner of taxes and a deputy commissioner of taxes. But the deputy commissioner of taxes under him is not supposed to make assessment. So his function will be different to assist the commissioner of taxes appeals. So here is the difference between the two. So both the definitions I have covered here. Commissioner means what I have said to you now, and commissioner appeals means also what I have said to you now. And then come to the definition of company, but we discussed Bangladeshi company. Now we will be discussing company. So company, we also discussed what is a company. Company could be a body corporate established or constituted by or under any law for the time being in force, any nationalized banking or other financial institution, insurance body, and industrial or business enterprise, whatever it is, that could be treated as a company. But it should be formed under the Companies Act 1994 or under Companies Act 1913. However, an association or combination of persons could also be treated as a company. When? That might be a question in the examination. When an association of persons could be treated as a company. An association person is a person itself, because association person is recognized by the Income Tax Ordinance 1984 as a person. If you go to section 20, you will see what a person is. Sorry, if it is not under section 20, rather the definition under section 2, person has got a definition. But under section 2, you will find what a person is. Person includes many things. Or could be individual, could be association of persons, could be Hindu undivided company, family, could be a company, could be a fund, could be a local authority, could be a corporation, etc., etc. So many things are given there. So association of person is a person under section 2. But if you are asked a question that when an association of person could be treated as a company, so you have a specific answer to that. And the specific answer is that when one of the members of the association of persons is a company, then it would be treated as a company. So generally, what we understand is that the members of the association of persons are individuals. But if a member of the association of person is not an individual, rather a company, in that case, the association of persons could be treated as a company. And any association or body incorporated by or under the laws of a country outside Bangladesh. So when a body corporate is incorporated under any law outside of Bangladesh, it could also be treated as a company. So there is no problem, but it will not be treated as a Bangladeshi company. Rather, it would be treated as a company. Any foreign association or body not incorporated by or under any law, which the board may, by general or special order, declare to be a company for the purposes of this ordinance. It means that a foreign association, when it is operating in Bangladesh, but it is not incorporated under any law, but it could be treated as a company as per the decision of the National Board of Revenue. That means the National Board of Revenue can take a decision with regard to the nature of the business. So it can treat this business or association as a company, and it can do it under a special order. And then come to the definition of cooperative society. Cooperative society means a cooperative society registered under the Cooperative Societies Act 2001. Or under any other law for the time being in force governing the registration of cooperative societies. So cooperative societies, as you understand, that it is a society under which there would be several members, and they have got an objective like they will supply a particular product to the society, and the society will sell the product on behalf of the members, and the profit they will be making out of that would be distributed among the members, or the sale proceed which will be accumulated by the cooperative society would be distributed among the members. So it is just to facilitate the sale to a particular company or particular supermarket maybe. So whenever you see that a cooperative society is supplying milk to a supermarket, it means that they are collecting milk from different members of the society, and they are supplying milk in bulk to a particular supermarket. So that is the easy way of delivering the product. Otherwise, a single member of the cooperative society cannot supply the milk to the supermarket. It is not possible for him. So he or
disconnected হয়ে গেছে।
Okay, so what we are discussing is that cooperative society. So we have given an example about the cooperative society, and you, of course, have got some experience maybe with regard to the cooperative society. Sometimes you can also conduct audit in a cooperative society in Bangladesh, and then come to the decision cost and management accountant. So this is also a professional institute under which a person becomes a cost and management accountant, and it is also formed under a law. Under a law means there is an act. It was previously an ordinance, 1977, and nowadays it is an act under the Law Cost and Management Accountants Act 2018. So they have got some courses, and almost all the courses are theoretical in nature. They don't have any practical experience because they do not have articleship program. So in that case, they are not supposed to conduct any audit. Rather, they have got theoretical knowledge in various subjects like cost accounting, management accounting, financial accounting, taxation, VAT, etc., etc. So when they pass the examination, they are recognized as an associate of cost and management accountant. And afterwards, they become fellow cost and management accountant. So this is about the cost and management accountant. And they have got office in Dhaka city. And of course, they have got coaching centers, coaching offices in Chittagong, Khulna, and probably in Rajshahi. Then come to the definition dividend. So generally what a dividend means, you know it very well, because a company actually pays dividend to the shareholders. So how the company pays dividend? Generally, dividend is paid out of the profit, and the profit is after tax profit. So when tax is paid on the profit, then from that profit, a certain percentage of it would be given as dividend, and it is declared in the annual general meeting of the company, and decision is taken with regard to that. That is how much dividend would be given to the shareholders, whether this is 5% or 10% or 15%, that is decided by the annual general meeting. And dividend would be given out of the retained earnings or accumulated profit. Accumulated profit means whatever profit you accumulated in the past after payment of taxes on the profit. So if a company is running at a loss now, or for a particular year, it has incurred losses, still then the profit, the dividend could be given out of the accumulated profit or out of the retained earnings. So that is also possible. But you should remember that whenever a company is dissolved and the assets are distributed among the shareholders, so in that case, that distribution of assets will not be treated as dividend. And some exceptions are there. Any profit remitted outside Bangladesh by a company not incorporated in Bangladesh under the Companies Act 1994. So whenever a profit is remitted outside Bangladesh to its shareholders or by a company not incorporated in Bangladesh. So whenever there is a company operating in Bangladesh, but it is not incorporated under the Companies Act 1994 or 1913, in that case, whatever amount is paid by the company or remitted by the company outside of the country, that would be treated as dividend. Okay, another tricky point is that any payment by a private company of any sum by way of advance or loan to a shareholder, or any payment by any such company on behalf of or for the individual benefit of any such shareholder, to the extent to which the company in either case possesses accumulated profits. So when advance is given to a shareholder by a company, but it should be a private company. Private company gives advances to its shareholders. Sometimes you will see like that. Or a loan is given to the shareholder by the private company, or any payment is made on behalf of the shareholder. That means the shareholder is owing some money to another company or another organization, and the company is actually paying on its behalf, on the behalf of the shareholder to that company. So one of the shareholders, he is owing 20 lakhs taka to a company, another company, and the payment is actually made by the company in which he is a shareholder. So if such a payment is made by the company on behalf of the shareholder, that would be treated as dividend. And same is the case with advance money or loan money. But that 20 lakhs taka, it should be within the amount of the accumulated profit. If it is more than the accumulated profit, then it cannot be treated as a dividend. Say, for example, the accumulated profit is taka 10 lakhs only of the company, and the company has made a payment of taka 20 lakhs on behalf of the shareholder to another company. So this 20 lakh taka would not be treated as dividend in case of the shareholder. Rather, taka 10 lakh would be treated as dividend made to the shareholder, because this taka 10 lakh is equivalent to the accumulated profit shown in the balance sheet. So that should be remarked by you. Okay, as I said that the loan money or advance money given to the shareholder could be treated as dividend, but there could be an exception. The exception is that when the main business of the company is lending money to clients or lending money to the people. So in that case, this payment of taka 10 lakh as advance money or loan money to the shareholder would not be treated as dividend, because the main course of the business or the major business of the company is to lend money to the people. So that would be treated as advance only, not dividend. You have to know that when the substantial part of the business of the company is lending money, and at the moment the company is paying advance or loan to the shareholder. So in that case, that would be treated as a loan or advance, not dividend. If there is a bonus share issued by the company, sometimes you will see in the annual general meeting that dividend is declared by the company as well as bonus shares. So when there is a bonus share issued by the company to the shareholder, the bonus share will not be treated as dividend. Rather, it will be treated as share capital, which is actually extended to the shareholder. The shareholder would be given the shares of the company, and in that case, the amount of the bonus share would not be treated as dividend. This is capitalized actually. Okay, then come to another definition, which is employee. Employee is important for you to remember because generally we understand who an employee is. But why is it important? It is important because whenever a notice is issued to the company, the question of employee comes in. Sometimes employee could be anybody who is involved in the management. Managing director is an employee as well. The deputy managing director, general manager, or some other persons in the managerial positions, they are also employees. So in relation to a company, includes the managing director or any other director or other person who, irrespective of his designation, performs any duties or functions in connection with the management of the affairs of the company. So whenever somebody performs functions or duties relating to the management of the company or management of affairs of the company, in that case, he will be treated as an employee. So whenever a notice is issued to an employee who is involved in the process of management, the issuance of notice should be treated valid. It cannot be treated as invalid. So whenever the managing director is absent from the company, and if a notice is issued, it means that it is issued to a person who is in the process or in the management of the company. So it would be treated as issuance of a valid notice. Then come to the definition fair market value. What is a fair market value? Fair market value is to be determined because of the calculation of capital gain. So you are going to calculate capital gain under section 31. And whenever you want to calculate the capital gain, you have to know the fair market value of the asset. Otherwise, knowing the fair market value of the asset, you cannot calculate the capital gain. So what is fair market value? The price which such asset would ordinarily fetch on sale in the open market on the relevant day, and where such price is not ascertainable, the price which the Deputy Commissioner of Taxes may, with the approval in writing of the Inspecting Joint Commissioner of Taxes, determine. So here are some points which are important to remember. And the important points are, you have to calculate the fair market value on a particular day. That means if I say that I inherited this property on 30th November 1996, so that is the day on which I inherited the property. So for calculation of capital gain, the fair market value on that date would have to be determined by the Deputy Commissioner of Taxes. So he has to ascertain the value of the property on that day. That means if the asset was put on sale on that particular day in the open market, how much could it fetch? So that is the matter of consideration here. And if it cannot be ascertained by the Deputy Commissioner of Taxes because he cannot obtain any information with regard to the fair market value of the asset on that day, in that case, it is the discretion of the Deputy Commissioner of Taxes to determine the price, that is the fair market value of the property, and he can do it on the basis of the information gathered from different sources or asking the people that in that year, in 1996, what was the price? Gather some opinions of different people, and he can average the opinions And after averaging the opinions, he can come to a decision. But he can just determine the fair market value after seeking approval of his supervising officer. And the supervising officer is the inspecting joint commissioner of taxes. He will just approve of it, the proposal given by the deputy commissioner of taxes should be approved by the inspecting joint commissioner of taxes, and then it will be treated as a fair market value. Then come to the definition of firm. You understand what a firm is because you are working with a firm, and those are chartered accountants firm. But generally, a firm is a partnership organization. So this is actually formed under the Partnership Act 1932, or it is regulated under the Partnership Act 1932. And the definition given in the Partnership Act is that the relationship between the persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. That means there could be some partners, and the number of partners should be 2 at least, and at best it could be 20. So between this range, between these two figures, the number of partners will vary, and all the partners could participate in the operation of the business or administration of the business, or one person could be operating the business on behalf of the others. But the most important thing is that they will reach an agreement under which they will have the sharing of the profit. So that is the most important thing. If there are 2 partners, they can share 50-50 of the profit, or they can share 90-10 of the profit, whatever it is. So there should be a contract, there should be a ratio of sharing the profit, and it is a relationship between the 2, or maybe among all the partners between 2 and 20. And then come to the definition of income. You understand very well the definition of income. It is profit or gain or income, whatever it is. So you can call it anything. You can call it profit, you can call it gain, and you can also call it income, whatever it is. But income also includes losses. You should keep it in mind. If it is a negative income, the loss is a negative income. So that will also be treated as income. Okay. Come to another definition, which is interest. And interest means interest payable in any manner in respect of any money borrowed or debt incurred. Sometimes this is called service charge. Maybe the Islamic banking system or the Islamic banks which are operating in Bangladesh, you will see that they say this is service charge, but actually this is interest. So whatever interest is, that is service charge. And this is for the use of the money you have been paid by the bank. So whenever you are utilizing the money given by the bank, you have to pay a certain amount of interest, which is the use of the capital. So this is a charge for the use of the capital. So that is revenue expenditure. That means it should be charged in the profit and loss account. And it is allowable expenditure under Section 29 of the Income Tax Ordinance 1984. Then come to the definition of market value. So market value is nothing but the value of the produce you are selling in the open market. So this is the fair value which you are supposed to get from the market. And you can get the value for your agricultural produces, which has been said like this, where such produce is ordinarily sold in the market in its raw state or after application to it of any process completed by a cultivator to render it fit to be taken to the market. The value calculated according to the average price at which it has been sold during the year previous to that in which the income derived from such produce first becomes accessible. It could be the normal price of a particular product, or it could be the converted price. Converted price means the product would be converted into, or it could be processed into a final product, and then it could be sold out in the market. So whatever you get out of the proceeds, that would be treated as the market value. So this is not very important for you to remember, but still then this is to be gone through by you. And then come to the definition perquisite. Perquisite is important for you to understand because whenever you are getting salaries from the company or from the government, you are not only getting the basic salaries, festival allowance, and other allowances, rather you are getting some other benefits. Those could be convertible into money. And this perquisite, it has been said here that any payment made to an employee by an employer in the form of cash or in any other form, excluding the basic salary, festival bonus, incentive bonus, not exceeding 10% of disclosed profit of the relevant income year. Arrear salary, advance salary, leave encashment, or leave fare assistance, and overtime. So some of the allowances will be excluded. So what would be excluded? Excluded would be basic salary, festival bonus, incentive bonus. Incentive bonus not exceeding 10% of the disclosed profit of the relevant income year. Arrear salary would be excluded. Advance salary would be excluded. Leave encashment would be excluded. And leave fare assistance and overtime, those will also be excluded. But if you have any other allowance other than these, then it would be treated as perquisite. Say, for example, your electricity bill of your house is being paid by the company. So if it is paid by the company, then it would be treated as a perquisite. If gas bill of your house is paid by the company, it will be treated as a perquisite. If telephone bill in your house is paid by the company, that would also be treated as a perquisite. If recreation allowance is given by the company, for example, you are going to a particular country with your family and the payment is made by the company, then this amount would be treated as perquisite. So that is the definition of perquisite in general. Then come to the person. As I said to you before, that person includes an individual, a firm, an association of persons, a Hindu undivided family, a local authority, a company, or every other artificial juridical person. This is section 2, subsection 46. So you can remember that person has been defined in subsection 46 of section 2, and it includes so and so. So this is an inclusive definition. That means persons will include the following. You will write like that. Then come to profit in lieu of salary. This is also very important for you. Profit in lieu of salary. So let us suppose that the amount of compensation due to or received by an SSC from his employer at or in connection with the termination of the termination or the modification of any terms and conditions relating to his employment. That means whenever a contract has been cancelled or modified and it has gone against you. So because of that, or because of the cancellation of the contract or modification of the contract, if you have been given some benefit or compensation by a company, in that case, it would be treated as profit in lieu of salary. And it will be taxed, assessed to tax. And again, it has been said, any payment due to or received by an assessee from a provident fund or other fund, to the extent to which it does not consist of contributions by the assessee and the interest on such contribution. That means whenever you are receiving some amount of money from the provident fund, so whatever amount you get, it should be equivalent to the contribution made by you and also interest accrued thereon. So the total of the contributions and interest accrued thereon should be equivalent to the payment you have received from the company. If you do receive an amount more than that, in that case, it would be treated as profit in lieu of salary, which should be taxed. And afterwards, there are some definitions which have been given in the handout. You can please go through those definitions yourself. And if you find any problem, you can just ask me in the next class. So those are not very difficult to understand. Important definitions have been given, like the tax day, transfer, speculation business, salary, Bangladeshi company, and resident. Resident is important for you. You have to understand who a resident is and what are the conditions of being a resident in Bangladesh, how many days you have to live here. So that, which is very important for you. If you want to become a resident of Bangladesh, you have to differentiate it from citizenship, because resident and citizen, these are different issues. If you are a resident of Bangladesh, if you are a foreigner, you can also be a resident. So if you live here for 182 days in an income year, you will be treated as a resident. Otherwise, you can fulfill another condition. And another condition is that if you stay here for 90 days or more in that year, having previously been in Bangladesh for a period of, or for periods amounting in all to 365 days or more during 4 years preceding that year. So in the concerned income year, you have to live for 90 days or more than that. And during 4 years preceding that year, you should have stayed here for 365 days. This is one condition which you can fulfill in order to become a resident. Otherwise, you can stay in the country, that means in Bangladesh, in an income year for 182 days in order to become a resident. So this is for individuals, and for Hindu undivided families, firms, or other associations of persons, the control and management of whose affairs is situated wholly in Bangladesh in that year, wholly or partly, of course. So for all these entities or for all these persons, their management or control is to be situated in Bangladesh. And of course, for companies as well, a Bangladeshi company or any other company, the control and management of whose affairs is situated wholly in Bangladesh in that year. So if this is a Bangladeshi company, its management has to be situated wholly in Bangladesh. Or if it is a foreign company, in order to become a resident company, its management should be controlled in Bangladesh or situated in Bangladesh. Uh, a local authority or any other artificial juridical person, they are resident, of course, because they are always here in Bangladesh. And they are maintained and administered by the local authority, which is the organ of the government. So that's why it is always a resident. And a trust or a fund or any entity, the control and management of whose affairs is situated wholly in Bangladesh in the year. So if it is a trust or if it is a fund and its management is wholly located in Bangladesh, in that case, it would also be treated as a resident. So up to now, we can stop here. This is important for you to remember all the definitions, because whenever you proceed through other sections of the income tax ordinance, you need to know the definitions well, because if you do not know the definitions well, then you cannot conceptualize anything. So that's why it has been given under section 2. It is at the beginning of the income tax ordinance, and the income tax ordinance actually wants or thinks that people who would like to conceptualize the definitions would be able to comfortably understand the elaborate sections of the ordinance. So that's why I believe, please go through it. If you have any problem with the definition, then ask me in the next class. If you do not have any question to ask, then we can stop here.
MCQ কিভাবে হবে এখান থেকে স্যাম্পল বের করতে আমাদের জন্য?
Can you say again, please?
স্যার MCQ কিভাবে হবে এই চ্যাপ্টার থেকে কনসেপচুয়াল, এটার একটা স্যাম্পল যদি আপনি আমাদেরকে দিতেন অথবা আপনি যদি বানাইতেন।
You mean conceptualization, or you want
Sample MCQ question.
Okay. Sample question. Yes, I understand. So I can give you some sample questions. Of course, that could be distributed by the student counseling department. So I'll make some questions, of course, out of that, and you can go through that. And if you go through them, definitely it will be of some sort of benefit to you in the examination, MCQ. So it could be related to, say, resident. It could be related to profit in lieu of salary. It could be related to, distribution of dividend, bonus share, payment of advance to a shareholder by a private limited company. And you will be given two figures that, as I said to you, that taka 20 lakh has been given to a shareholder of a private limited company, but the accumulated profit is 10 lakh taka. So if the accumulated profit is 10 lakh taka, how much should be treated as dividend? So it cannot be 20 lakh taka. It should be limited to 10 lakh taka. Something like that. Questions should be like that. And of course, when the substantial part of the business of a company is to lend money to others, in that case, advance made to a shareholder cannot be treated as dividend, because the major business of the company is to lend money. So it is like payment of advances to people, whatever has been said, whatever has been advanced to the shareholder. So something like that. And the distribution of profit when it is dividend, when it is not. When the distribution of assets is made among the shareholders at the time of dissolution of the business, whether it could be treated as dividend or not. Like that. So I'll just prepare some questions for you, and that will be distributed amongst yourselves by the counseling department. Okay?
Thank you.
Okay then, thank you very much for attending this session.
Okay, sir. Good night, sir.
Okay, sir. Good night,
Thank
sir.
you, sir.
Good
Good.
night, sir.
Okay. Have a good preparation for the examination. I believe that will help you a lot, and you will pass the examination because the examination is conducted under MCQ. So MCQ sometimes is very good. But one thing is that if you go through the chapters well, so it is expected that you would have a thorough understanding of the chapters. So if you go through the chapters, you will have a thorough understanding, and then you will be able to answer any question, whatever is asked from any chapter. So that's the beauty of, MCQ. Okay, wish you all the best, and hope to see you in the next class.
Sir, thank you, sir. Thank you, sir.
Welcome.
Thank you, sir.